Are you wondering if you can actually afford to buy a home here in Madison? Maybe you're renting, watching prices climb, and thinking, is this even possible for me? Let's break it all down because with the right plan, homeownership might be a lot closer than you think. Welcome to week one of the Homebuyer Academy, where I walk you through every step to owning your first home. Affordability isn't just about what a lender says you can borrow, it's about what you can comfortably live with. Buying a home should feel exciting, not stressful. So let's look at what affordable actually means for you. When you buy a home, your monthly payment includes more than just the loan and interest. We call it PITI, which stands for principal, interest, taxes, and insurance. Principal and insurance, that's the loan itself. Taxes are your annual property taxes divided into monthly installments. And insurance is your homeowner's insurance and sometimes mortgage insurance if you put less than 20% down. So your taxes and insurance usually get paid by whoever holds your mortgage. And we call that, it goes into an escrow fund. So when you make your monthly payments, a portion of that gets put into your escrow fund, and that pays your insurance and your taxes every year. Altogether, that's your true housing payment. Financial planners recommend that your total PITI stay around 28 to 35% of your take home pay. If you're closer to 40%, that's okay. It might still work, depending on your lifestyle and other debts that you may have. But it's a sign to pause and look a little closer with your lender and your agent. The goal is simple. The mortgage should fit your lifestyle, not take it over. We don't want you to be house poor. Besides your monthly payment, you'll need cash for a down payment and closing costs. Your down payment is anywhere from 3 to 20%, depending on your loan type. There are loans available that you can put 0% down. Those are a VA loan. So if you're a veteran or a military member and you are eligible to use your VA loan, you would be able to only put down 0%, and then you would not have to pay the mortgage insurance. And then USDA loan also allows you to put down 0%. Your closing costs are another cost to plan for, and they are typically 2 to 4% of the purchase price. That's why saving and planning ahead is so important because it puts you in control. When I work with buyers, we don't start with the price of the home. We start with your monthly comfort zone. And then once we establish that, I connect you with lenders who can show you exactly how that translates into home prices, taxes, and insurance in different neighborhoods. That way, we shop smarter and focus on homes you love and can actually afford. So this week, grab your pay stubs and run some numbers. If your ideal home payment is about 30% of your take home pay, you're on the right track. In next week's lesson, we'll talk about choosing the right real estate agent, someone who can help you shop with confidence and negotiate like a pro. Thank you for joining me for week one of the Homebuyer Academy. If you're ready to start your journey, please grab my free Homebuyer Starter Guide below. It's your step-by-step guide to buy with confidence. And don't forget to subscribe so you don't miss next week's episode, How to Choose the Right Real Estate Agent in Madison, Wisconsin. We'll see you next time.